The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Excuse me. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. on Wednesday morning. We kick things off, and right now we got an S&P negative by about 32 points, NASDAQ negative by 207. I was just taking a look. As we look at it, why not, folks? Let's jump over to the two stocks that reported last night, and both of them trading lower, man. Microsoft lower in a big way from 252 to 233. You got Google, Alphabet lower as well from 105 to 98. What does that do, folks? That sends the Qs down from about 284.71 to 279.15. That's why you have the NASDAQ 100 off 1.8%. Now, interesting enough, you're just right back to where you were yesterday morning, man. So quite the acceleration yesterday to the upside. A lot of that optimism may be misplaced, as the two stocks that kick things off for a big week, especially among the tech stocks, the FANG stocks, do not deliver. We'll get into them throughout the program. But you're talking about 230 points below where we were coming into the close last night. Quite an acceleration. Microsoft and Google missing. Dow off 93 points right now, 31,784. And how about the Russell? In the positive, they don't have the negativity of all the FANG stocks going on out there in the Russell. Actually have the Russell positive by 1/3%. Crude, 86.24 on the price of crude. We're going to be talking to our man Teddy Kegstad at 40 past the hour. And folks, Teddy has his webinar coming up. We'll talk to him about it, but that's tonight. You can sign up for the Tiger Forex Report right on the front page of TFNN. You get the report for a month. You'll gain access to Teddy's webinar right after my dad's program at 4 o'clock Eastern time from 4 till 5. If you can't attend it, folks, it'll be archived. It'll be on your members page by tomorrow. You can check it out. And as we do that, we jump over to the currencies because, boy, they're driving a lot of the action, man. The dollar index down to 109.938. Now, what I was doing on this chart when I was coming on the air before we jump around, and that's why I got the purple and I got the other chart on here, is I was comparing the dollar index to the SPY. And what I was doing was I was looking at it over the last year, because we all know that as you get that strong dollar, right, companies doing business in the dollar, of course, inversely. Now, when on this chart here, first you have the dollar index, which is the candles. Okay, that is the actual candles, the red and the green on that chart. You have the dollar index, you have the index on the right, the axes on the right, the dollar index. So right now we're sitting at 110. There's the channel line it's been in. In the purple here, you have the SPX, okay, the S&P 500. So you can see the relationship, folks, and I bring it up because, boy, if we ever get a rollover in the dollar, it'll be interesting to see what happens. Now, here's the other part of this equation, though. You get a rollover in the dollar, and the bears out there are saying this, folks, but it is a possibility, right? You've seen the markets reacting to fiscal policy. That has been the reason why we've had rising yields, which has caused the dollar to rise, searching out those rising yields. The rising dollar and rising interest rates hurting growth stocks especially, but hurting the entire market as yields have risen dramatically among the cost of capital that's hurting them as well, right? But just the cost of capital has created this relationship in the markets where we have higher yields. Now, we could make the same comparison, folks, and we will. Why not? I'll pull up the market versus the 10-year, right, to see how they're related. The point that I'm getting to get to it is that we're now seeing a rollover in the dollar. At the same time, folks, we have negative dollar action and we have negative market action to do with earnings. So pay attention if this becomes a new trend, because that is the bear case, man. The bear case is, guess what? Yeah, the Fed is going to be done hiking, but the Fed's only going to be done hiking because the economy is in so much trouble. And that's going to cause a rollover in equity prices, even if the Fed pauses because of the recessionary tendencies pulling back in the economy. We're seeing an example of it today, folks, when we just got Microsoft and Google earnings. So it's a real eye-opening wake-up, I think, to what the next trend could be. Now, the bulls, okay, we were talking about Morgan Stanley's Wilson, right, who had been a bear for a while, and now he's talking about a short-term bull. And one of the cases he presented, I talked about it earlier this week, was you could get a run-up to potentially even 4,200, 4,300. Let me take off this study real quick. You could get a run-up to that level, to 42, 4,300, as guess what? The Fed begins to pause. Inflation tendencies in the economy begin to wane. The market likes that. But all his case said, folks, is that you get those recessionary tendencies pushed back to the middle of next year. Well, guess what, man? You're seeing some of these numbers in Google and Microsoft, okay? These are going to be big moves, and I don't think they're going to stop on the open, folks. Yesterday, Google was pushing 105. We're off $7, just like that. Microsoft was pushing 250. We're going to open at 233, folks. 233 on Microsoft, for some context, pretty much right near the lows. We got a day or two that we were below that level, okay? Now, you talk about the totality of just what's happened since last night. How about $300 billion almost? You look at the numbers. Microsoft, this is market cap, pre-market losses, okay? Microsoft, 115 billion, Google with 80, but they're all getting hit. Apple, Amazon, Meta, Tesla, chip stocks, Nvidia, all trading lower. We jump over, Apple shares, 150, 238, can open at about 151. Nothing like the moves going on in Microsoft and in Google, but a pullback nonetheless. And folks, remember, every single dollar that Apple trades, you're talking about $16 billion in market cap. Amazing, right? We jump over to Amazon shares. There's a drop off for you from 120 down to 115. We're back at 116 right now. Jump over to Tesla shares, down a bit to 219. We jump over to Meta shares. Facebook down about $6. There's a drop off for you, man. Chip stocks they referenced, right? Chip stocks down about $3 for Nvidia from 133 to 129.20. So pay attention, man, because on any other day, right, you're getting this type of dollar move. You're getting a dollar move from 112 to 111 yesterday, and guess what? We just got a continuation overnight from 111 to 110. And meanwhile, growth stocks are getting hammered because they have an earnings revision. It's what the talk has been, folks, and we got two of them happening already. And with that, we're getting, what are we getting? Slightly lower yields. We had the run up yesterday. Right now, you get the 10-year. I believe we're sitting at about 4.06. What are we at right now? 4.05. The yield on the 10-year. Not that long ago, man. I think I was talking about 4.3. Was it even to begin the week? It probably was. It was probably Monday when you had the 10-year in the 109s. We're pushing 111 this morning that we're at 4.3. So we're in a new, possibly new environment, folks, because the market knows that the Fed is going to pause at some point, but what it doesn't know is what's going to happen to earnings. And we just saw a glimpse, man. And if you ever start getting yields pulling back, you get the dollar weakening, and that's not able to hold up the market because earnings are taking such a hit. That's going to be the bear case, man, and we are seeing it play out today. It could be a wild week, folks. Don't forget how far we've just traded up. You take a look at the NASDAQ 100, you put it on a daily, you're talking about, yeah, still 1,000 points off of where we were trading at just 9 days ago, okay? So the moves have been fast. They've been furious. All we've done is kind of accelerate back to where we were on September 22nd, the highs that we had on October 6th. You trade to that level, and then we get two disappointments to kick things off with Google and Microsoft. We get some other companies out as well. We got Meta after the bell today. We get Apple and Amazon on Thursday. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Network. Folks, stay tuned. I'll be back in 3 minutes. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&Ps negative by 30 points right now. That's about 0.8% in the red. NASDAQ 100 off 213. That's 1.8% in the red. And the Dow right now negative by 76. You got the Russell in the green by 0.6%. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, fast market from the TD Ameritrade Network right here on Tiger TV. Your hosts, Kevin Hincks and Tom White. They do an outstanding job of breaking down the day's market action, folks. They walk you through hypothetical trade setups using options. They do 3 trades a program. You can learn so much from watching it, and we got a great week going on of some volatility. And boy, Kevin, what do you think of the 2 giants last night? A little bit of tough numbers coming out from Microsoft and Google Alphabet.
Good morning, Tommy O'Brien. Yeah, the two biggest names yesterday, Google Alphabet, Microsoft, not great. You know, this market got lulled into a false sense of security when the financials came out with pretty good earnings, and airlines and travel came out with pretty good earnings. But now we're into a much dicier part of earnings season, and that is ad spend. And, you know, Google and YouTube, they rely heavily on ad spend, but so does Microsoft in a way. Remember, they've got LinkedIn, they've got Bing, they've got Microsoft News. So even they're susceptible to ad spend. But for Microsoft, it is, you know, revenue up 11%, net income down 14%. So slowdowns across PCs, across just pretty much all aspects of their business has got, you know, Microsoft down about 6.8%, Google Alphabet down 6%. So, you know, as we look to Meta Platforms coming out with earnings after today, it's not a good precursor for them, as ad spend, kind of a follow-through from Snap now to Google Alphabet and YouTube. It doesn't look very good. It looks like the ad spend, financial services, insurance, loans and mortgages, crypto industries, all those with significant drops in ad spending, Tommy.
Yeah, there's a lot of action, man. That's a great summary as you go through some of the action this morning. And Google, you mentioned the Snap earnings, and they were last Thursday. And I was looking at this morning, Kevin. So Google obviously reacted to those earnings last week. They were trading just above 100 coming into those Snap earnings last Thursday. They trade down to 98 post-market last Thursday. And then with the market, they take off up to 105. So pretty interesting when you look at it that way, right, Kevin? Where last Thursday, Google was at 100. We got the news of Snap earnings. and Google trades to 105 by Tuesday afternoon before they come out with their numbers. And then, of course, we find out, man, it is a tough deal. Pretty surprising that Google, their YouTube revenue actually went down. I'm so used to hearing like, they went up by, LinkedIn's a perfect example. Microsoft's getting punished, but they were up 17. Yes, LinkedIn quarterly sales growth shrank to 17%. So they grew 17%, but down from 42% growth. But YouTube revenue actually went down 2%. You don't see numbers that overall revenue declining for a pretty great product, man. I'm out there preaching YouTube. For all that we pay, Kevin, for streaming, we broadcast Tiger TV within YouTube. I watch YouTube. My kids watch YouTube. It's all completely free. But what is it? It's ad-driven, man. So revenue going down. Pretty remarkable. NASDAQ down in a big way, Kevin. We actually got the Dow barely red. Interesting to see the action. Dollar index with some action as well. With that in mind, we move forward through the week. What are you guys talking about today, Kevin, coming up at 12?
Yeah, today we'll look at more names coming out with the earnings. Like Folio will do presentation on Meta platforms, as you would think. And then we're going to trade ServiceNow and McDonald's. McDonald's actually tomorrow morning before the open, and ServiceNow after the bell today. So 3 good names coming out with earnings, more earnings plays in these big names.
And it is pretty interesting. I'll do the same scenario on Meta. Meta, it's just remarkable how this market accelerated higher into basically so much unknown. And what do you think, Kevin, about the VIX? Because we got a lot of negative market action right now. And I have the VIX on the Thinkorswim platform trading basically flat, down 4 pennies, 28.42, right near where we were. We got the S&Ps down 34, NASDAQ 100 off 224, divergence with the Russell positive. But what do you think about the VIX? Not catching too big of a bid just yet in the 28 price tag right now.
Yeah, we'll see where that goes once the market opens and options in the SPX start trading. But I would expect VIX to be, sharply higher and probably back over 30 pretty soon. These markets are getting a little dicey, but you just never know, Tommy. The VIX, remember, the VIX is a function of the implied volatility of the SPX contract. So whatever's trading there is what's going to drive the VIX. So I would expect, though, the VIX to be back over 30 pretty quickly.
And we get that opening bell, folks, in 6.5 minutes from right now. Kevin, I appreciate you taking the time as always, man. It's an important week. We look forward to the program at 12 o'clock, and we'll talk to you tomorrow morning as well.
Have a great day, Tommy.
You too. Folks, tune in every trading day. You heard about it. They're talking about 3 great stocks. Meta is going to be an important one as they have their earnings. They're down dramatically already. And as I mentioned, man, you go back, right? You take a look at this thing, just going back to where we were for Snap earnings, right? Interesting when you look at the acceleration this market had, because Facebook, coming into Snapchat earnings, okay, was at 132. That's where it's at right now. And you got horrible Snapchat earnings. You got horrible Google earnings in the process. And Meta somehow found a bid from 126 up to 138 within the span of those 2 accelerations going on. Not sure that Meta deserves to be at the same price tag it was at Thursday, prior to learning that Snapchat is in big trouble when it comes to numbers. Google is in big trouble when it comes to numbers. And folks, declining revenue for a product like YouTube does not make sense, man. Jumping back to those numbers real quick. YouTube advertising revenue dropped 2%, man. Normally, markets punish public companies for declining growth rates, not actual declining overall numbers. Microsoft is getting pummeled today because LinkedIn's quarterly sales growth shrank to 17%, down from 42. Guess what, folks? It doesn't take many misses like that to recalibrate the future value of a market capitalization of a company. You grow at 42% for 2 to 3 years, you're at 100 to 120% growth. You grow at 15 to 20% for 3 years, you're at 50 to 60% growth. Huge difference for that growth, and that is LinkedIn's revenue. But guess what? They still grew 17%, okay? It's amazing to me that a product like YouTube, which seems to still be growing, and I feel like they're shoving more ads in front of my face whenever I watch it. Now you got to watch 2 ads, right? Most of the time. Sometimes you got to watch an ad in videos like every 5 or 6 minutes. Sometimes it feels like people who are creating videos. But I love YouTube, man. I watch whether it's information for health, and fitness, whether it's information just for podcasts I enjoy, whether it's information for motivation, self-help, many things. And then you go into the kids programs. My kids watch tons of things on YouTube. So it's a great product. So I'm surprised by that. But guess what? Listen to those numbers, man, because if YouTube is taking in less money, then boy, everybody's going to be taking in less money, man. Now, they grew exponentially, to say the least, but that one was a wake-up, man. You jump over to Google shares, and you're pushing right near the lows at 97.57 from 105 to close out yesterday's action, and Microsoft really getting pummeled, man. Microsoft down $20 from 250.270 to 232.31. We'll come back. We'll take a look at those. We'll take a look at some of the other companies out as well. We'll take a look as we go through the week. Stay tuned, folks. We'll be right back for the opening bell. Teddy Kegstad has just announced a live webinar coming up for subscribers to his newsletter, The Tiger Forex Report. Wednesday, October 26th at 4 p.m. Eastern Time, Teddy will be hosting a live 60-minute webinar, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report newsletter. In this 60-minute webinar, Teddy will be discussing a full breakdown of the markets that influence currency pairs, as well as applying those variables to individual currency pairs, how to evaluate trading scenarios for risk versus reward, as well as a live question and answer session. Sign up now and gain instant access to this live webinar coming up, as well as a month subscription to Teddy's Tiger Forex Report, which comes with a 30-day money-back guarantee, so you have nothing to risk. Don't miss out on this live webinar event with Teddy Kegstad, Wednesday, October 26th. Sign up now for the Tiger Forex Report at the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open right now. You're looking at S&P, opens negative by 31 points. You get the NASDAQ 100 off 261. Let's see how the big dogs open. Microsoft, yeah, they continue to drop, man. Microsoft down 8%, 7.86%. We just break below the lows that you had last night at about 6 o'clock. Microsoft down big. You have Google shares, Alphabet. Yeah, they drop even more, man. That one, Mark is paying attention too, man. You know, look where we were pre-market and look where we are on the open, man. Google's getting punished, and probably rightfully so, because they have declining revenue at YouTube. That is a big problem, man, in a big way. You jump over to the Qs this morning. Q's off 2.3%, just like that, to 277 from 284. Russell hanging on to gains by about 6 points. Crude right now up 74 cents at 86.03. Gold contract 1666 from 1679 overnight. We jump over to some currencies. We won't get too big into them because we will be talking to our man Teddy Cakestat at the next segment after the next break at 40 past the hour. But we got a 109 handle pre-market. We're at 110.39. Let's see how the dollar yen is trading right now. Dollar yen 147.17. All right, jumping around to what else we had going on. We got a couple of the stories out there in terms of numbers. Bed Bath & Beyond shares fall after interim CEO Sue Gove appointed to position permanently. So they appoint the interim to CEO, and the stock says, not a fan. Yeah, fell about 8%. This Bed Bath & Beyond. Is it BB? BBBY? 3 Bs? There it is. Oh, I see. Well, it fell, but you had quite a run up. You're up 4% on those numbers. This market catches a little bit. S&P's only negative by 23. Let's see how the VIX opens this morning. Boy, always interesting when you get this type of price action. Now, you have divergence in a big way with the Dow positive. The tech stocks really taking it on the chin, man. Let's see how Meta. I bet Meta is getting trashed this morning. Yeah, down 4.3%, pretty much right where it opened. I'd pay attention to Meta, man, because if YouTube is losing money, Meta is definitely losing money in the same pot. And they're still at prices you were at last Thursday. Yeah. As Google's now off 8.8%. All right, let's jump around to some of the other stories I had pulled up here. Let's see. So ESPN, they're selling part of the X Games to an investor group that includes Tony Hawk. Yeah, to a New York-based private equity firm, MSP Sports Capital. So they'll continue to air the games and hold a minority interest in the business. No financial terms were disclosed. X Games started in 95. They got summer and winter in there. The next game is going to be held in Aspen, Colorado from January 27th to 29th. So you got a former VP of content at Twitch who's going to become the CEO of X Games. And you got Tony Hawk joining an investor group there. Kind of interesting that they sell that off depending on how much they got for it. Terms not disclosed. Disney up a little bit today, up about 1/3%. I wonder if it had to do with collecting a little bit of cash for that potentially for Disney. Let's see how the streamers are doing. Netflix down a little bit, down about 0.2%. Let's jump to some of the other FANG stocks this morning. Apple down about 0.9% for Apple. We get their numbers on Thursday. Amazon, they get punished, man. Down 4.4%. Now, that's an interesting one. Is that talking about ad? Is that just talking about the number of spending? Because Amazon's in the ad business as well, you know? But I wondered because they're getting punished today in a big way. And this is all, right? This is all when we got higher price, lower yield. So you got growth stocks getting pummeled. And meanwhile, we got the 10-year up by 12 ticks. And you're talking about the yield at 4.04%. Interesting action when you get this type of an action, a potential little bit of a reversal in yields in dollar. But guess what? Growth stocks can't catch a bid at all. Dow, pretty strong. You're pushing 32,000 right now in the Dow right now. And you got the Russell, strongest of them all, up by 0.6% at 1811. We may see a rotation, as our man Basil Chapman would say, to some degree. All right, let's jump to other companies out with numbers, man. Those are the two big ones, but we got Boeing out with the numbers as well. Quarterly loss on problems with Air Force One and the tanker problems. Air Force One, that's its whole conversation in its own. It disclosed it had lost more than $1 billion on the contract for the new Air Force One aircraft negotiated with Trump. And, yeah, they're taking it on the chin for that, man. Adjusted earnings per share, $6.18 versus expected 7 cents, but that's going to be because of what some of those charges in there. Revenue, though, a big miss by $1.7 billion. How about that, man? We jump over to Boeing shares this morning. Yeah, they've been taking it on the chin, and they're taking it again. Down 1%, man. You pull up the 3-year weekly, right? Fighting to get back in this channel line, but not really getting there just yet. That was a pretty well-defined channel line until you broke out of it on their earnings a couple quarters ago in April. came back within for a moment, and you're just pushing 145. I'd be careful there. At some point, Boeing will find a bid. But boy, down again, and some tough numbers there as they continue to disappoint on the earnings sector. JP Morgan, they see Treasury route worsening on inflation risk. They see yields could reach 5% if the Fed ramps up rate hikes. Well, I'll tell you, folks, they're getting a little bit of help talking about tech stocks. They're going to be reining in expenses. They're seeing less ad spend, right? The impacts of what's going on right now are being felt. It's just a question of whether there'll be enough of an impact that would allow the Fed to pause in any degree. We're not even close there just yet. Yen should continue falling on rate differentials, and the yields could reach 5% is what they're talking about, man. Now, you take a look at the move these notes and bonds have had, okay? And we've talked about it with our man, Teddy Kegstad. We'll get his take next segment, man, because he talked about it last Wednesday when we were on the air, saying, look at the weeklies on some of these moves on the dollar, on the yields. Since August 1st, folks, you barely had one green bar there, but guess what? We got quite a green bar right now going. We're only 2 days into the week, okay? But that is quite a green bar, but here's the kicker, okay? That's the first bounce, man. That is not indicative of a move differential in terms of a change of direction. You get a 382 bounce, you're still talking about you could go up almost 3 points from where you're at right now, folks, and be just around the 382 of the move we've had. Okay, so be careful in the market. You're going to get bounces. It doesn't mean the trend is over. And it's remarkable that almost nobody's talking about a week from today. We get a Fed meeting where they're supposed to raise by 75 basis points. People are talking about it, folks, but we have a lot to happen from then till now. We get Meta earnings. We get the biggest company in the world, Apple. We get Amazon, one of the biggest companies in the world, on Thursday. We get GDP numbers out. We get personal consumption and expenditures, PC&E, which the Fed loves to look at. We get all that stuff, and then we get the Fed meeting coming in next week where they'll go 75 basis points. That'll be an interesting conversation. But then what do we get right after that? We get non-farm payrolls, and then we get CPI for the month of October. So volatility coming at you, folks. Don't be surprised if we get some big moves in this. Does not mean that the trend is over. And you got JP Morgan out there basically saying that. As you can see, yields rising to 5%. We just basically dropped on the 10-year from 4.3 to now about 4.04%, the yield on the 10-year. Yeah, pretty remarkable if that's how it plays out. What else we got? Speaking of yields, how about it? Now, we've seen these numbers out for a while, but you're going to see these numbers popping up more and more now. 7% for the first time in more than 2 decades, extending a string of deep increases that have stymied housing demand. I'd say so. Rose 22 basis points. How about that, folks? 7.16%. Stay tuned, folks. Come back with Teddy.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&P futures down by 24, NASDAQ 100 down by about 226 right now, and the Dow in positive territory by about 18 points. Let's jump over to our man, Teddy Kegstad. Folks, we talk to Teddy every Wednesday at 40 past the hour. Teddy writes an outstanding newsletter, the Tiger Forex Report. He publishes it with issues every Monday and updates when warranted. Today's a great day to sign up for the Tiger Forex Report, folks, because not only are currencies running so much in this market as usual, but Teddy's got a webinar tonight, 4 till 5, a 60-minute webinar. It'll be live. It's taking place in our Discord room. All subscribers gain access. If you can't attend live, it will be archived as well up on your members page tomorrow. You subscribe for 30 days, folks. You still get a 30-day money-back guarantee. I'm looking forward to the webinar tonight. It's a special time in this market, man, with everything going on. Teddy Kegstad, good morning.
Good morning, Tommy.
Boy, where do you want to start, Teddy, man? First, let's give the listeners and the viewers a little bit of a glimpse, if you can, about what you're going to be talking about tonight for the hour with subscribers to the Tiger Forex Report at 4 o'clock Eastern Time, Teddy.
Well, we're going to talk about, obviously, the major Forex currency pairs. We're also going to talk about yields. We're talking about crude oil, the dollar index, and also the upcoming Fed meeting, and basically how I put the newsletter together every week. Well, you know, what are my ways of putting my outlooks on each market and in any given, situation. So that's what we're going to do, is we're going to basically do a walkthrough of how I break down things when I put the newsletter together, especially when I'm not thinking about just the next day, but actually what's going to happen over the next week or so.
I can't wait for it, man. I'm going to be in that room for sure. And listen, if you've been following the program, Teddy's had some great calls, whether it's talking about the dollar index, whether it's talking about crude in particular, that shapes so much of what's going on. And Teddy, maybe we started off with the dollar index, because I always read your letter on Monday, man. I read to check it out, because just like we talk about, things are so important right now with yields, with currencies driving so much of the action, and the dollar's got a little bit of a pullback, and maybe give the viewers, the listeners, because that was kind of right near maybe a potential correction zone, and how you look at that dollar index and what you're looking as we kick things off. Can we do that? Yeah,
absolutely. The dollar index is actually pointing down towards our correction zone right now. So right now, I remember on Friday, if every day you call for a bottom or a top in the market, eventually you're going to be right, So, and the reality is we've had a lot of volatility that came out of nowhere on Friday afternoon and followed through into Monday. We had a big reversal in the dollar index. You got to remember, on Friday morning, the dollar was actually pushing highs. It was looking for a breakout to the upside, not a retraction, So, and because of the news that was put out by the different media outlets, was saying that the Fed was going to stop raising interest rates. Well, they're going to eventually, that's for sure. But we know that they're not going to stop raising rates, at least for the next 2 meetings, that's for sure. There's at least 2 3/4 rate hikes coming. Jerome Powell has been very staunch and hasn't even said he's going to take this foot off the gas anytime soon. Now we know that, yes, next year they should start pulling back, where maybe instead of doing 3/4 rate hikes, they start going to a 1/4 point, or maybe they skip one meeting or two, but with the intention of still raising rates. Like, we know that we're coming into that environment but that's still half a year away. We still have the Fed meeting next week, and then we have another Fed meeting in December. And this is in the midst of earnings season and a bunch of other things. So I think that what you're seeing is a very big knee-jerk reaction: buy the rumor, sell the fact. And I would say that probably what you're going to see is, like, for instance, we had the dollar index was already getting hit over the last 2 sessions. Yields were pressing higher up until yesterday morning. So now we got a short-term buy signal in the 30-year Treasury bond futures. But that's a counter trend move, and that's a perfect setup for going into next week. Yields should pull back as we get into Tuesday, which the markets are going to go flatline into Tuesday and the Wednesday. You'll probably see the bonds trading another 2-3 basis handles higher. The dollar index trading around the 109 to 107 area, maybe churning around in that area. Then what happens on Wednesday? They pull the trigger, and then you know what happens? We know that they're going to raise the rate another 3/4 point in December. So what's going to happen? You're going to see a big sell-off in the bonds, a big rally in the U.S. dollar, and I think that that's probably the way it's going to shake up. I would be very cautious right now. I think it's a rally to sell if you're buying into any of these other currencies versus the dollar.
It's pretty cool, man. You put the move on, a daily, just going back. I mean, the moves have been so large, Teddy, and you've been talking about it. You get a bounce, man. You're nowhere near as in, even just talking about Fibonacci numbers jumping to the 10-year, for instance, on a Fibonacci basis, man, a 382 is almost 3 full points higher, and that's just from the move we had from August, going August, September, it's not even October. So that's getting a 382 bounce of a move that's been less than 3 months old, and you could go 3 points higher. And I'm not saying you will, because that's almost 114, but that's actually the high as well from earlier this month, which is pretty interesting. The high from 113. What do you want to jump to next, Teddy?
How about the yen? You want to talk about the yen?
What do you want to talk about?
Well, if there's been volatility anywhere, it's been the yen. I mean, longs and shorts have both had to gotten chewed up over the last few sessions. I mean, and Friday was indicative of that. And see, this is where I think you can see why we had such volatility on a Friday. Because at that point, European markets are closed, Asian markets are closed. Only the algos are really on. And this is where AI I think, really causes problems with the markets, especially when they're thin. Because one of the things that AI programs are driven on, all these algos, is the news. They have filters for Twitter, Facebook, CNN, CNBC, all this stuff. So when they all of a sudden get this major media outlets broadcasting everywhere, the Fed is stopping the raising of rates, don't you think that influences the algos? And causes these very big, erratic, erroneous moves that come off only when these things come out, and I think that that's what's generating. And the reason you get this volatility, it's kind of like, I saw this great demonstration of where AI has a lot of flaws and has a long way to go. If you ask AI to show you a picture of a salmon fisherman, or of a person fishing for salmon, you know what they're going to show you? They're going to show you somebody on a boat with a fishing pole, and then they're going to show you at the end of the fishing pole a piece of salmon that you eat on your plate, not a fish. You know what I mean? Because it's not, there's certain things that there's so many other variables that it's common sense to us that still isn't programmed into AI. It doesn't get that, or it may never get that, because that's a human thing, So, and I think that that's what we're running into with these moves. So I would say that, before you listen to the news, listen to what the other Fed people said last week, especially 2 of them that said they're all for the Fed keeping this stance on raising rates and continuing to combat inflation and not let up on it for a while, So that doesn't mean that they're going to be putting the brakes, come December. I think that this is just a corrective environment that we have over the past couple of days.
And what's kind of cool is, we just get a constant stream of data. It feels like, man, we got big earnings coming out, of course, but then we get PCE this week, we get GDP, we get Fed meeting next week, and then we get to do all the big numbers again with non-farm payroll. We'll get CPI. And like you and I have been talking about, man, those numbers, there's just been all these expectations. Now, maybe they will, right? Maybe the data will line up and give them the room to pause after they go 75, 50 a quarter or something, which is almost like a best case scenario. But that means that we need some big numbers that just have not come in. Every single month it's been, CPI is hot. Look at the last 2 months when the CPI came out, folks. The market just collapsed, let alone we rebounded last time. But there's huge misses on that CPI number. which is pretty interesting. Can you hang with us for this break, Teddy? I want to go over the crude contract a little bit when we get back, okay? Folks,
Sounds
stay
good.
tuned. We're going to be coming back with our man, Teddy Kegstad. And please, we're going to go on break for 3 minutes. We're going to come back. We're going to talk a little bit of crude. We'll finish up the conversation. Head on over to the front page of TFNN, folks. Try out Teddy's newsletter. Try it for 30 days. You'll be in that room for the webinar tonight. We'll be right back in 3 minutes. Stay tuned.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We're talking to our man, Teddy Kegstad. We're talking some commodities, some currencies, and let's jump right into crude, Teddy. We got crude accelerating higher today. We're pushing $87 at 86.66. What type of price action you looking for this crude contract right now?
I'm watching that $90 level. I think that right now the market's been wedging. We put it in the report this week, looking for a breakout. And I think that if we can get above 90, then we're heading towards that key area of 93.75. And that's going to be a nice little upper end test. Are we just going to be in a range trade consolidation market here? Are we going to have stability, at least at these higher prices? Because if we're going to have that, that's where we're going to run. We should run into the roadblock. If not, then that means we have higher prices ahead, and I would say we're going to be going back up above 100. So right now, the market obviously has been in a downtrend since since the beginning of the summer, since the middle of June. But it bottomed out at the end of September, So, and I think that right now between the low that was set in September and somewhere up around $93, that's your range trade. So if we're just going to consolidate, that's where we'll be. But at least on an hourly basis and now on an intraday basis, on a daily starting as of today, we are breaking out to the upside, meaning we're pressing the wedge. So the market's been wedging, this way and this way coming to this point. We're starting to look like we want to break out to the upside. I'm looking for $90 as the key level. I think that's the first step. If we can sustain a trade above there, be cautious selling into it. I think that we could have a breakout to the upside, especially, things aren't exactly great in the world right now, So, and I've been saying, look out for wintertime, especially you got to think that the spreads for the wintertime, they're going to start getting really bullish. And I think that's going to help to lift the pricing also.
It's pretty cool, everything that's in flux as a trader, man. And I agree. Geopolitically, man, you talk about Russia, whatever you talk about, China, in terms of how that may impact the price of crude. Teddy, we appreciate the time as always, man, the education, and we look forward to the live webinar tonight at 4 o'clock Eastern time.
See you this afternoon.
Man. Okay,
Absolutely.
We'll see you then. Thanks so much,
Take
Teddy.
care, guys.
Folks, check it out. Tiger Forex report on the front page of TFNN.com comes with a 30-day money-back guarantee. And stay tuned. We got our man Basil Chapman up live next. Thanks so much, folks. Have a great Wednesday.